I'm Osborne Foreman, and in this video I'm going to analyse PowerHouse Energy stock by giving my views on the business and whether I personally would buy shares of PHE stock right now. And as always, if you find the video useful or entertaining, please drop one of these to support the channel. PowerHouse Energy designs, delivers and licenses plastic regeneration processes to generate hydrogen and electrical energy systems in the UK and internationally. They offer distributed modular generation or DMG technology, which converts calorific waste products into streams of synthetic gas. PHE is listed in the AIM market, has 4 employees and a market capitalisation of around £300 million. I would consider PowerHouse Energy to be in a near monopolistic competition, and this is due to their licensing of the DMG technology. This has led to a potential exclusive contract with Peel, and they are anticipating further exclusivity contracts internationally. Furthermore, I believe this to be an industry with very high barriers to entry. They require high levels of specialist skill, in this case the engineering aspect. They require a high level of time investment commitment to obtain the contracts and the difficulty around getting them, and furthermore it's a difficult niche to initially start generating revenue in, as it's quite capital intensive. Which brings me onto the financials of PHE stock, and they aren't great, but it is understandable as the company is in a much earlier stage, and the idea of investing into PowerHouse Energy is buying where they may be in the future, and so the market or the investors of this stock have certainly priced in the future, and they're likely pricing ahead for the future with beliefs of where the company will be in 5-10 years, for example. What we can see, however, is a promising trend in which PHE has actually generated £100,000 of revenue compared to last year with a revenue of nil. This is likely from their engineering services on the Protos project, and further agreements have been signed for the engineering services until completion. This means that it's very likely that the group will continue generating revenue, and if not, grow upon their existing revenue stream. Even more promising is the increase in free cash flow, which has actually reversed the negative free cash flow trend that they initially had experienced in the last few years. Whilst currently PHE still has a negative free cash flow, it has certainly been improving by a significant amount, and if it were to continue improving year on year, then the level of risk in this investment could likely be reduced quite dramatically. However, this has also been inflated and looks better than it actually is, and this is due to the exercising of a warrant which they had earned in 2018, which had given them an income of around £192,000, and also share dilution or raising capital by selling more shares to investors. Share dilution isn't good for current investors of the stock, as it means their value of their investments is likely going to lessen as there is now more shares in that existing share pool. Where there is more shares, there is a lower demand and therefore a lower price, ever so slightly, or depending more or less on the scale of the dilution. On the other hand though, there was actually a decrease in contract costs, which had improved the net cash flow of operations by £170,000, and that certainly is very impressive. With their future and Peel and their financials, this exclusivity contract could prove very promising for their future. This is because Peel has a vision of over 70 DMG plants in the UK, and they've signed the commercial terms for the use of DMG technology, in which PHE will receive an annual license fee of £500,000 per plant, which could lead, and I'm speculating here and there's likely some errors I need to account for in the maths, but likely they could receive an annual income of £35 million from these 70 plants. Once more, this is speculation, but that's certainly quite a future they could have, especially because it is annual and it is inflation linked, so it will grow with inflation, but also it's consistent money that they could rely on. If you'd like a free share, sign up to Trading 212 using my link in the description down below and deposit just £1 to get that free share. However, on the other hand, if the quality of PowerHouse Energy's balance sheet is low, this could mean that the stock is much more riskier and perhaps in extreme situations likely to go bankrupt. So let's have a look at the quality of their balance sheet to see if this is the case. When looking at the quality of PHE's balance sheet, we can see that their short-term assets do not outweigh their short-term liabilities. Furthermore, they have negative shareholder equity, and this is not a good sign. This means if you'd have invested or bought any shares of PHE right now, you don't own any underlying assets of the business, and in fact this is outweighed by the level of debt, which certainly adds a lot more risk to the investment as the accumulated losses outweigh the shares and the shares premium. If their balance sheet quality remains like this for the future, then it's very likely to me that they may have to undergo further shareholder dilution or raising capital by other means. Although should Peel sign this exclusivity contract, this actually means that they could get a one-off fee of £500,000, which would certainly bolster the balance sheet and improve the quality of it. This combined with their cash position of £214,000, certainly no small sum, and can allow them to survive for the foreseeable short-term future. It's also worth mentioning that they will be receiving engineering payments for the services as they are developing these projects, so there will be some more income coming in and likely could improve the balance sheet, providing the costs aren't too high. As of making this video, I have in fact realised that after reading this report, which is the interim report that had finished or concluded by September 30th, we in fact can see that they did undergo another shareholder dilution, and they had released 250 million shares at a price of 2.5 pence each. This would have raised around £5 million in spare capital, and therefore the quality of PowerHouse Energy's balance sheet is going to be a lot more superior than I initially had realised. This means the level of risk in the investment is likely to be a lot lower, and they at least can now survive for a much more significant period of time, providing their costs do not increase dramatically. Ultimately, it depends on the timescale of the DMG technology-based plants. And as you can tell, I am no experienced person in this industry, and therefore I couldn't make any estimation, nor could I find any estimations on when these plants would be due to be complete. Although it's understandable, as these plants are still in the planning stages and are at a very early stage. So therefore it would be unwise for businesses or analysts to speculate on when they would be completed, as it could be a much further completion date than expected. But at least 11 of these DMG plants have been initially contracted, and since they are likely in the planning stages, we can see some progression over the next few years, which could end up generating shareholder value. The future for PowerHouse Energy's industry looks promising to me. This is because of the news of the 10-point plan for the Green Industrial Revolution proposed by the UK Prime Minister, in which £12 billion will be used to generate £250,000 of highly skilled jobs. I meant 250,000 highly skilled jobs in the clean energy sector, which would be located also in the UK. In the last 5 years, PHE stock has returned investors with a return of 1,156%, and this massively outperforms the industry and the market. My view on PowerHouse Energy is that I'm personally not going to be buying shares in this company. I don't have any massive concerns about the business. They have a strong balance sheet after hearing about that shareholder dilution, and the future for them looks quite promising. But I understand that I have a lack of understanding in this industry, and I don't want to invest in what I don't fully understand, as there's likely things I've missed despite reading a majority of the interim report. Although I've made quite a few energy sector stock analysis, that's because I would like to understand more of this industry and furthermore learn why people invest in these stocks. And I can at least see the investment basis and why people would be interested in buying this stock. Also, if we compare this to my holdings in the portfolio, this stock would be considered a lot more speculative, as all of my companies are heavily profitable, growing their earnings year on year, and are at least 10 times bigger in market capitalization, which also potentially means I have less growth potential than PHE, but I also have a lot less risk. I think this stock would be more ideal for the investor that's interested in buying more clean, more ethical, or perhaps looking for a brighter future and therefore agree with the ESG funds. But this also can represent higher growth potential in the future, since you're investing in an individual stock rather than perhaps a clean energy fund, and therefore you have the chance of that higher growth, which means it's likely not for those nearing retirement, as this is a very volatile stock, and at that stage you would much prefer to preserve your wealth rather than try and build upon it rapidly. However, I think this is a stock that would resonate with a lot of younger people, and these people might want to increase the risk in their portfolio, look for a brighter future, and therefore invest in PowerHouse Energy. And it really depends on that risk tolerance and how comfortable you are with the volatility. If I were to buy this stock, I would deposit small, consistent sums of money and actively build up the position. I wouldn't put a lump sum in because you could purchase stocks at a high, the next week they could be down 20%, whilst in the long term they could increase over that time period. What's going to stop you from selling the stock? I would also actively try to avoid overweighting my exposure to this stock, as this is still a lot higher risk than perhaps other investments you have in your portfolio, and therefore there should be a level of caution involved. But I do understand having a healthy exposure could increase your overall returns and help you beat the market. If you're interested in my iShares Global Clean Energy Fund review, then click the card at the top right of the video. Thank you for watching. Have a great day.